Good morning, everyone, and welcome to another episode of Dividend Stock Talk, brought to you by the 10-Minute Trader with your host, Mr. James Gardino, and where we're going to talk about investing in dividend stocks for weekly and monthly cash flow. Today is January 12th. It is 9:29 a.m., and you're about to hear the morning bell for the stock market. If we can get this bad boy to open up. Here we go. And here we have it. Okay, so if you've been following us for a while, this is the third broadcast for Dividend Stock Talk at the beginning of the new year. Let me quickly go over where we stand at the moment. We have 3 positions. If you don't realize what we're doing is every year we start out with a $100,000 account and we trade it using a dividend investing strategies. This one, there we go, market is open. This one we started out last week, first week of January. This is now the second week of January. We did couple of trades yesterday. We'll go over those in a little bit. The trades we have that are open at this moment in time is AFG, CL, and LOW. I'm going to get into those very shortly. Okay, so the first stock we're going to open up is going to be AFG. We're going to open up a quick chart and briefly go over what's going on with AFG. AFG started the year. Now, when we bring up this stock chart over here on the left-hand side, it automatically sets up for 1 year's worth of data. That means from today to 365 days ago. So exactly 1 year ago today, it's going to show you what it was, and it's going to slide all the way over to where it is today. So exactly a year ago today, APA started out at 108. Took about a month or so to find its high of the year at 112, and then quickly, and about a month later, dropped down to the low of the year, 41.59. Now from there, it took about a week or so for it to jump up into a trading range of, 56 to 71, and it traded for almost the whole year, where it finally broke out of that trading range in the beginning of November, and it settled into a new trading range where we are today. The trading range now that APA is in between 83 and 91. All right, so AFG is at this moment in time $90.14. Now let's open this up and show you what position we got. We're going to right click on that. This window drops down, and we're going to look at view trades. And the trade that we got back on January 5th was the call spread, the vertical call spread, the 83.85 vertical call spread for AFG. We bought the 83 and we sold the 85. So as long as the stock stays above 85, we're going to make our return. And as I recall, I think it was a 25 or 30% return for 2 weeks. So I normally don't do 2 weeks spreads. For some strange reason, I got that one. Maybe I was just showing someone how to do it. I don't really know. But anyway, as long as she stays above 85, we're good to go. And as you can see today, she is at $90.14. So let's go to our next contestant. CL, Colgate Palmolive. Colgate Palmolive is, if you didn't know, a dividend king, meaning they've increased their dividends for a minimum of 50 years, consistently every year, more and more money to the shareholders. Gotta love it. Okay, so Colgate, let me read the chart for you. Colgate popped up last year at $70.07. Didn't take long for it. Traded there for about a month, and it jumped up to a high at the moment of 77 back then. Then she found the end of the tail end, which is the bottom of the bottom price for the year, which is 58.22. From the 58.22 is a constant profit taking, all the way up to a trading range where she settled for the past couple of months, finding the high of 86 for the year. So she's in this trading range now between 81 and 86. Okay, it was a tighter range between 84 and 86, but this past week she just dipped to find a little bit of a support right around 81. So we're at looking at it, and she's at 82.14. Let's show you the position that we jumped in on Colgate at. I gotta open up the view trades. So right click and then you just open it up. Okay, so we bought 300 shares at 82. And we're doing a dividend spread. No, not dividend spread, sorry. We're doing a a dividend trade, which is a dividend capture trade. Let me explain. We buy the dividend before the EX date, hold on to it until after the date of record, collect that, and then sell it for a profit. But this one, we're doing it 10 days ahead of time, so it's on the 11th, which was yesterday. We bought the 300 shares, and we're trying to collect the 35-cent dividend. So right now we got a sell order for, it doesn't even show what it is. But anyway, it's 35 cents higher than what we paid for it. So if we paid 82.89, then we're probably going to look at 93 something. But I don't know where it is at the moment. 83 something. Sorry, 83 something. Okay, we also bought 50 contracts yesterday of the 81.5, 82.5 spread. And I believe that was for a 25% return. Okay, so as long as this thing stays above 82.5, we're going to make that 25% spread, 25% profit. Now, we're going to quickly take a look at what Colgate normally does this time of year. We're looking at a standard chart, which is the candlestick chart. And we're going to jump over to the seasonality chart. The seasonality chart, hopefully I don't have to continuously explain what the seasonality chart means. The blue lines up here represents what the stock is presently doing this year. It doesn't really mean a whole heck of a lot of beans on this screen because it's just popping up on this chart represents 10 years of the stock's performance. How the stock normally moves on a yearly basis and what actually happens from January 1st all the way to December 31st. As you can see, this company's not that bad. If you buy it first thing in January and just hold on to it at the end of December, you'll make money on it because it's a steady growth. Not a whole heck of a lot because it is a dividend pay and it does share its profits with its shareholders or its investors. But what we're looking for is just the next 4 or 5 days, because that's all we're concerned of. So here we are right here, the blue line, which represents today. You should see down the bottom, right, it says 111, which is today's date. Now, if we crosshair the low line with the top blue line, the red line shows that it is going to go up a little bit and just kind of sideways, up and sideways. That's basically up and sideways. So we need to do a strategy that is going to be profitable for an up and sideways type of trend. Now, dividend capture is perfect for that. You buy it and you add the dividend onto the price that you paid for it. That gives you your new sales target. Okay, that's the trigger. Basically, a trigger trade is. You buy it at the open, whatever the open is. The computer adds your sell price in it, and whatever it opened at, plus the dividend is our new sell price, and the computer automatically does that for us. So we can set it before the trading day opens and be out of there. And just let the trades do their thing. Okay, so it basically up and sideways, which is not bad. And we got what do you call it? Oh, yeah, we got two. We got the dividend trade, which we're looking for that 35-cent dividend. anywhere between now and the EX date, because we don't want to hold it past the EX date, because the EX date is the last day the stock trades before the dividend's paid out, and we're kind of hoping it increases before that happens. Or we'll just collect the dividend and collect the premiums from the options. Now, options aren't really part of the dividend capture strategy. I just throw them in there to get a little extra boost. So as you can see, last week we did 8.9%. So this week we're trying to up it up a little bit. All right, so that takes care of Colgate. Colgate is right where we want it to be, kind of, because that's at 82.14. And as long as she stays above 82.50. Okay. So it's a little tight now because it's 82.14. We don't want it to be 82.14. We want it to stay above 82.50. Damn. Okay. Last one we're going to quickly look at is Lowe's. It's just LOW. LOW. Try this again. LOW. Sometimes if you don't put the stock ticker in, it doesn't work quite right. Now, Lowe's is another dividend king, again increasing its dividend payments to its shareholders for a minimum of 50 years, which, worst case scenario, we continue to get more and more money every year just by owning the stock. Okay, so quickly on the dividend, on the yearly chart to the left, we're looking at 120.69, which was a year ago. She went sideways for about almost 2 months before finding the low in mid-March at 59.50. Now from mid-March at 59.50, she continues to go all the way up to a high of the year into mid-October. Okay, she hits 181.14, which is the high of the year. Now she jumped into a sideways trend right around August and continued to go sideways for the whole year and into this year. Now Lowe's has had nice 5 days up in a row. 1, 2, 3, 4, 5. Yeah, 5 up days in a row, which makes us all happy. So what position are we in on Lowe's? Let's view the trades. Now we have just a call. We have just a spread on Lowe's, which is only 10 contracts on Lowe's. The 60, 62.50. Wow. Okay, so anyway, we're profiting on that one because the stock right now is at 66.32. A nice little uptrend, which it could continue to keep going. So let's do a Lowe's trade. Why not? Let's see if we can get some of that Lowe's money. The Lowe's money is another 55 cents. So could we do? Now we already got the money on Lowe's, because we did a dividend capture strategy on Lowe's a little while ago. How about, instead of that, how about we look at a covered call? Because at 166 now, so if we buy the at the money, if we buy the stock and sell the at the money call, that's 266. 167. Yeah, at the money's not bad because she's in an uptrend. But let's just do a dividend call, a dividend capture. Okay, the dividend trade right there. Remember, it's 55 cents. Let's do 500 shares with the 55 cents. Let's go to 55. There we go. So what it's going to do, it's going to buy 500 shares at the market. And it's going to do a trigger trade, which adds to the market whatever I get it filled at, plus the 55 cents, so I get in and out really quick. Okay, that tells me it's going to take $42,000 to do that trade. Off to the races you go, and we're automatically filled. There you go at 66.91. Okay, so that was quick. In the 66.91, and we're trying to sell it. It's not telling me what we're trying to sell it for. Okay. Now we're going to take a look on Wednesday to see what happens to it, because there is the opportunity to do different trades on Wednesday, because Wednesday's halfway through. This is only the second trading day of the week, and things can happen differently between now and Wednesday's close. So we're going to just settle where we are. We got lows. So we have 10 contracts for the 160, 162.50, which is way in the money. We could actually do another one of those, or put a lot of money on this one. Okay, the 160, 162, that's probably priced out of our range. Yeah, see, it's only going to bring in 25 cents, which is a 10% trade. Now, do I really want to do a 10% trade? The 162.5, 165, so 182. That would be 90. Okay, let's do 20. All right, we're looking at the 162, 165. Well, maybe not. $164.40 would be the break even on that trade. Now we're going to do 20 contracts, like I said. Okay. You know what? I'm going to hold off on this trade because I'll wait till Wednesday. Because she's at 165.99. She could continually go up. Who knows? All right, so let's do. We got $46,000. Let's do another dividend trade. Now we looked at AP. Did we do APA already? We did APA. APA is paying their dividend out on the 21st. APA, yes, we did. We got patchy. It started out at 32.19, quickly found its high of the year at 33.83. Took about 2-3 months for it to drop down to the low of the year in the end of March at 3.86. That had to hurt. Now from there, it took about a month for it to find the trading range of that's $8 to $16. The new high came up with in the new trading range is 17.81, but she's at 17.08 at the moment. And for 25 cents, let's try APA for another 25 cents. Why not? APA. Buy custom, and here we go, down to my dividend trade for 25 cents. Okay, so we're going to that's not right. Let's get out of there. Definitely not buying just 100 shares. Not even worth my while. Because it's only at $17. Alright, so at $17 we're looking at 5,000 shares. Alright, there we go. Alright, so we're going to buy 5,000 at the market. And then we're going to fill in the 25 cent trigger trade, which is equivalent to the dividend. So we just jumped in at 17.28, which is rather quick. 17.28, and we're looking to sell it at 17.53, which would be a new high for this little area, wouldn't it? Yeah, because the last high we had here was 17.50. It might make it, might not. I don't know. We're going to keep our eye on it. So anything over, what we paid for, it's going to be profit. And the dividend is coming up in 2 weeks. So that takes us down to 3,200. We can make a couple of option plays. Now, who do we have for an option play at the moment? We have AFG, APA, Colgate, and Lowe's. Yep. I think we have no option play on APA. Oh, that's right. Let's give APA a real quick look. Let's go for the vertical. There it is, the 17. What does the 16.50 look like? That's a nice trade. That's a 100% trade. As long as she stays above 16.50. All right, let's just do 10 of them. But that's only $230. Are we sure? That's a 100% trade. Let's get out of there. All right. What we're looking at, they're going to do 50 contracts on APA. Now, we're going to buy the 16 call and sell the 16.50 call. Okay, it's going to cost us a grand total of $1,215 to buy 50 contracts, which controls 5,000 shares. Now, the max profit we're going to make off of this one, which is over 100% for 4 days, 4.5 days, because Tuesday, Wednesday, Thursday, Friday, 4 days, is 1,350, which is over 100% return. Now, 100% return if this thing gets filled. Oh, well, anyway, the trade is just sitting there. Let's see if it opens. So if the stock stays where it is, 1705, anything above 1650 is going to be 100% return, which it still has to fill for that amount, which I don't know if it will. Right now she's between 23 and 39. Okay, so let's go to the next one, the 1550 60. It's worth 1 penny. 1 penny ain't worth diddly squat. Now the at the money, which is a 1650 17 call, that's going for 36 cents. So for it to stay exactly where it is or to continue to go up, that 36 cents, which I seriously doubt the 1650 is going to call because it's so close to the money. All right, let's see if what else we have. That's APA, CVS, and Lowe's. We got that one. COG, LEN, Procter & Gamble. Procter & Gamble. Procter & Gamble. All right, let's quickly take a look at Procter & Gamble because they have a dividend coming up on the 23rd. Now, Procter & Gamble started out the year at 124. It traded sideways for about a month before finding its low down at 94.55 back in the middle of March. From there, she jumps back up to a trading range of, 111 to 121 for about two months. From there, she finds a new trading range in the end of August. The new trading range is 134, 135 to 140 Found the high of the year at 146, settling back down at 137, which is where she is today. And she just keep on going lower. So she's had 3 down days from the last week. And today's another down day. So do I really want to jump in before they find their bottom in this little trading range that they're in now? I'm going to say no for Procter & Gamble. All right, what else do we have? LEN. Holy cow, that just shut my whole system down. Now I gotta sign back in again and see what's going on. So while you guys are listening still, I hope you all understand at least what dividend capturing is. You know, where you buy the stock before the EX date. You wait for the stock to rise, and then you either sell it before the EX date, or you wait until after the EX date to collect the dividend and to move on to the next stock. We could be done now because that should be enough time for what we've done. We could break the segments up into 2 or 3 segments. Yeah, because we're just about out of money. Save the that is interesting. Well, this is James saying goodbye for now. 10-minute trader, Dividend Stock Talk. Catch you tomorrow.